Hello, everyone. My name is Axel Kirstetter. I am the VP of Product Marketing here at Datasite. I'd like to welcome you to our Thought Leadership series on restructuring. I'm joined here today by Whitaker-Moore, former editor with Deadwire, who's been gracious enough to join us here on a little conversation. As you all know, the global crisis has a devastating impact on a whole bunch of different industries, not just in the US, but worldwide. No two industries are exactly the same, and so it's quite helpful to get an overview across the board as to what's happening in restructuring, what the best practices are. And then our Thought Leadership series, Navigating the Storm, we're going to be conducting a few interviews to cover off everything that's happening. And so with that, I'd like to welcome and thank Asia for being here and to talk to us about restructuring. Asia, from your perspective, how should companies address market events and volatility that's going on right now?
Well, I think the biggest key right now is for companies to be proactive. I think that they really have to take stock of their cash flow position in distressed situations. Cash flow is king. So looking out over the next month to 2 months, can I pay my employees? Can I pay my bills? And also evaluating what the vendors to those companies are doing in this environment. Do I want to send cash out the door to a vulnerable vendor or supplier who may not be able to, ship me the goods that I need to run my business? So I think, the first steps are really no-brainers in terms of evaluating cash positions. And then also taking a look at their capital structures. Do they have a lever to pull within the existing capital structure? Can they draw down on their revolvers? Can they secure assets in order to raise new capital? Those are all things that I think companies should be looking at in this environment.
Obviously, restructuring is one element of the wider mergers and acquisitions area. What sort of short-term challenges are there in M&A and specifically in restructuring?
So I think M&A was experiencing a little bit of a slowdown already at the end of the fourth quarter, the beginning of the first quarter, and some statistics recently in the Wall Street Journal, showed that M&A activity in the first quarter fell 33% to a 7-year low. So, even if there was appetite to do a deal in this environment, buyers and sellers would still really struggle to come to a valuation. And I think that they would also be really challenged to find committed financing in a market like this, because the banks are really challenged in terms of funding new M&A commitments. They're already stuck with kind of billions of dollars on their books and committed deals right now. And I think that there would not be, appetite in the secondary to fund very large, leveraged transactions right now. So those are some of the challenges M&A advisors are facing. And I think that, there's also a physical issue. Deal making of any kind right now would be difficult when it has to be, virtual from scratch. And you have advisors and companies who are used to, having a big relationship component to putting together those transactions, now having to be, physically apart from each other. So I think there's a lot of challenges facing M&A right now.
The tele-distance is indeed a bit of a challenge. I would have preferred to do this face-to-face discussion as well. We're relying on modern technologies to help us out here. But with that, are there any particular sectors that are likely to be more resilient than others?
Yeah, I think there's a few, and related to business services, telecom, kind of office equipment, certain kind of technology and delivery companies. I think anything that is going to be, key in helping support home workers and companies who are trying to support workforces who are now, remote for some length of time will fare a little bit better in this cycle than others. I think there's also going to be some bright spots for companies in medical products and devices and, for obvious reasons. So I think that, just a handful of those would be on the short list.
Yeah, ventilator production companies and personal protective equipment vendors, certainly, if they have capacity to ramp up, that will be very welcome. What about on the negative side? Which sectors are going to be hit hardest?
Yeah, I think the negative list is much longer. I think energy companies, particularly oil and gas, were already challenged by this environment, but now they're going to be slammed by plunging demand, by falling oil prices, and I think that you're going to see a lot of restructuring in that sector in the next 12 months. There's also, anything that's exposed to kind of the battered consumer. So anything that's travel and tourism related, we've got airlines, we've got hotels, brick and mortar retail, and restaurants. So I think that you're going to have a lot of challenges in that area. Also, automotive companies, shipping, they're going to be impacted as the demands for their goods globally shift, and they also have to deal with supply chain disruption. And lastly, I'd probably mention construction, home building, kind of engineering companies as ones to watch on the negative side.
Yeah, sadly, quite a wide range of industries, and the volatility in the stock prices in the last couple of weeks have been quite dramatic, with tons of companies over the last 24, 48 hours indicating that they have to lay off, furlough some staff. So we'll keep an eye on how that's going to be evolving. Have you seen divestitures or restructuring activity pick up? And what sort of, I presume the answer is yes, but what sort of timeframes are we talking about?
Yeah, I think, overall the magnitude of defaults is, obviously unknown at this point, but, the expectation is that it's going to increase dramatically. All three of the rating agencies have increased their default projections from, historic lows in the low single digits to, certainly double digit increases to 10%, and in worst case scenarios to the mid-teens and 20% range. So things are definitely going to be picking up over the next 12 months, and potentially longer. Right now, the traditional capital markets are effectively closed for leveraged borrowers, and advisors are being inundated with calls from companies seeking advice. So we're definitely expecting activity to pick up over the next 12 months.
There's obviously been, since the last recession, quite a few companies that have emerged. It's been 10 years since we faced this current scenario. There's probably not as much knowledge out there about opportunities that exist within restructuring. And so what strategic questions should participants ask themselves whether they do need to restructure or not?
Well, I think, the opportunities are, you have an opportunity to streamline your business and your operations. You're going to evaluate, your assets. Are they core? Are they non-core? And if they are non-core, can you get real cash value from them now, even if you do have to divest them at a discount? And, you're also, there's going to be opportunities for, distressed M&A. I think you will see, maybe some unexpected players who, always band together in times like this to weather the storm. You'll have distressed players that come together just to survive as one. So there will be opportunity in restructuring, but it's always painful. You have to evaluate workforce, you have to evaluate people, you have to evaluate contracts. So there's a lot of pain that goes with restructuring, but on the other side, if you can come out with a streamlined business with much less leverage, you have a better chance of surviving another downturn down the road.
But so would you advise someone to look more at the balance sheet, at the income statement, a bit of both?
Yeah, right now, I think everybody has to be looking at their cash flow position and looking at liquidity. In a distressed situation for a leveraged company, cash is king. So, you have to be evaluating over the next, 2 to 3 months, can I pay my bills? Can I pay my suppliers? Can I pay my employees? And if the answer is no, what am I going to do about it? Can I draw down on my revolver? Can I secure assets and raise capital? Can I find rescue financing, from a non-traditional lender or from an existing lender? And those are all things that I think companies are going to have to be going through right now. They have to also determine, whether they can comply with their existing covenants and what their debt covenants, if they have them, allow them to do in these situations.
And so we've seen over the last couple of days and weeks a few companies drawing on their credit lines. Do you see that necessarily as a sign of problems, or is that more sort of lightening up the liquidity side of things?
Yeah, I mean, I think that companies are, doing what they need to do to survive, and the revolvers are there for a reason, and they're probably, getting good advice from advisors or taking their own advice and saying, we need cash in the door. We have this option available to us, and let's draw it down. I don't think there's any shame in doing that in this environment, and I think it will impact the banks and lenders that have to fund those commitments, but they're there for a reason, and it's no different than an individual who was experiencing some personal financial challenges, using their credit card to survive. That is, there's no shame in doing that.
Indeed, no shame in doing any of that. Cash is king, as you mentioned, in the current times. What are the pros and cons of restructuring, advantages, disadvantages, given the times?
I mean, I think the pros of, proactively restructuring or evaluating your options in this time are that, you're going to, buy yourself time to potentially access options that don't exist today. I don't think that anybody knows whether this, the dislocation that comes from this pandemic is going to last for, the optimistic scenario of, another quarter or two, even though the economic impact is going to be great, regardless, or whether, we're dealing with COVID-19 issues for, a year or more to come. And also, I think, there's still a lot of question marks around how central banks are going to continue to support businesses, how they're going to continue to support consumers, and same with governments. We really don't know how far the stimulus is going to go, if new tools are going to be added to the toolbox to help companies weather the storm. So if you can be proactive now, you have a better chance of survival down the road.
Yeah, fair enough. Restructuring is not exactly new, but a lot of companies are new to the business of restructuring. So what practical advice do you have for companies that want to go through this?
Yeah, I mean, I think, right now, they do need to be, proactive in terms of reaching out to their existing lenders, their existing, banks, to talk about, their willingness to continue supporting their operations. There's going to be a lot of picking and choosing when it comes to, investors deciding which companies they're going to continue to support, where they want to make big investments. So, building those relationships and, doing your best to forecast what your earnings projections are going to be. I think, that's actually been a very big challenge for companies in this environment is, how can they reasonably, go to lenders and creditors and say, we expect our earnings to, be on this trajectory over the next couple of quarters, because, they don't necessarily have the same visibility that they did before. But, those companies that can do that, are definitely going to be, in a better position. So, being proactive, continuing to build, relationships, and, think outside the box.
So a couple of key learnings here: be proactive, be on top of your liquidity, be exit prepared and ready to transact if needed to be. And so with that, Asia, I just want to thank you in advance for participating in our thought leadership series. And thank you for your contributions here as well, and wish you a fantastic rest of the day. Stay safe, and thank you again for being here today with us.
Thank you. Thanks for having me.
Thanks.